Hey guys, August 12th, one day after AMC's earnings yesterday on Monday, August 11th, and I've got a couple of additional thoughts that I want to share with you guys over the next couple days regarding that earnings and some other due diligence that were things to talk about in the 10Q, and maybe we'll get those videos out as time permits. But there was this interview on CNBC this morning with the company CEO. I have not seen it, so maybe let's just watch it together, and then I can give you some thoughts. I'm really curious what was said.
Posting revenue growth and an increase in attendance. Box office hits like Minecraft, Lilo and Stitch, Sinners, and F1 bringing moviegoers back to the cinema. AMC chief Adam Aron's with us this morning to talk about the quarter and the overall industry. Adam, welcome back. Good to have you.
Good morning. You know, with all the heavy news I'm watching on your program, isn't it nice that movie theaters are booming and people can escape their daily lives and get two and a half hours movie theater?
Yes. You had a good post yesterday running through attendance revenue and food and beverage per patron. You don't think this is sort of a one-time spike?
No, I think finally, after 5 years roaming around in the wilderness after COVID, I think the movie industry is finally back. If you look at the numbers that AMC Entertainment posted yesterday, our attendance was up globally 26% in the second quarter. Our revenues were up 36%, and there's so much operating leverage in our business. Our EBITDA was up 391% year over year. It's a pretty good day when you can quintuple your EBITDA from a year ago.
So how do you leverage this moment? Where do you put any tailwinds? Where do they get directed?
The tailwinds are the movies that are coming out from the major studios and our big partners in this whole effort, and some of the independent producers who are giving us great film product too. But when you look at the current run rate, the 12-month run rate of movies starting April 1st of this year through what we believe will be the case through March 31 of 2026, the 12-month run rate is fabulous, and the box office is going to be the biggest that it's been since COVID. Fortunately, we've made our company so much more efficient. Our profit per patron is up almost 50% since pre-COVID levels. We don't actually need the box office to come all the way back to pre-COVID levels, but we do need movies. And when you think about the movies that are coming, hello Wicked for Good at Thanksgiving, hello Avatar, Fire and Ash at Christmas, we're looking at a ton of big movies that are being released in theaters over the next actually year and a half. Not only is 25 looking good, but all of 2026 is looking great.
Well, you're going to need to keep the momentum going after F1, which my kids have already seen 3 times in the theater, Adam. So what is it?
Speaking of F1 quickly, yeah. F1 is such a perfect example of one of the reasons why the movie industry is recovering. First, you have this transaction that was completed just last week where Skydance is taking over Paramount. Skydance has already indicated publicly it wants to double the number of movies that it releases at Paramount. F1 is a major effort from Apple. And as we know, Apple, one of the most important companies on the planet, can really add to the strength of Hollywood if it commits to movie making in a big way. And F1 was an enormous success for Apple. We expect more coming from Apple in 2026, 2027.
No, it was a big bet that paid off for them. But my question, Adam, is Happy Gilmore 2 is a streaming original. It didn't come to theaters. And so there is this sort of lurking question about whether that is a new model.
Well, it's a model, but it doesn't mean it's a model that comes at our expense. When you look at some of the biggest movies that have come out in the past decade, movies like Avatar 2, movies like Avengers Endgame, movies that gross, $2 billion worldwide. Like, Netflix was a business. I mean, the consumer's appetite for content is so voracious that streaming services and theaters can operate harmoniously together at the same time. And actually, we argue, and the facts support, that the most successful movies on streaming services are not the ones that just go to streaming services first and only, but they're the ones that go to theaters first, where there's a big theatrical release, a big global phenomenon. Then they go to streaming services, and they're watched that much more. What was the biggest movie watched on Paramount Plus? Top Gun Maverick. Why? because it grossed $1.5 billion in movie theaters around the world. So, look, we're very content, optimistic, confident about our future. We know what movies are being released theatrically. There are a lot of them. And so streaming can be our friend. It doesn't need to be our foe.
Adam, just to get to the financial metrics, obviously you're talking very positively. The quarter was a strong one, but you still have $4 billion in debt. I know you've moved a lot of it out in terms of maturity. But, for those people who bought this stock along the way and are looking for free cash flow and looking for you to be able to establish significant earnings despite that debt load, what do you tell them?
Well, first of all, hello, David. Nice to see you again. Actually, AMC has used the last 5 years since COVID to pay down a lot of debt. We have over $1 billion less debt today than we had when we entered COVID. And that's come, obviously, when the box office was depressed. There is so much operating leverage in our business. As our revenues grow, our EBITDA grows that much more. In the fourth quarter of 24, our revenue went up 18%, our EBITDA more than tripled. In this quarter we just announced, our revenues went up 36%, our EBITDA almost quintupled. The ability for us to drive EBITDA growth, which will then in turn allow us to refinance some of our debt, lower interest rates, that's all good. But look what we just pulled off in July, just last month. We just did a major refinancing of our debt, which started in July of 24 and finished in July of 25. We moved over $2.5 billion of debt from a 2026 maturity to a 2029 maturity. I think we've got our debt load capably under control. And as our EBITDA rises, our leverage level falls. And I actually, one sophisticated analyst told me, you're going to finally grow into your capital structure because you're bringing down debt, you're extending maturities, and you're growing EBITDA all at the same time.
Adam, pretty fascinating. We love talking theatrical exhibition. Good to see you again. Thanks for coming on, Adam Aron, AMC.
My pleasure.
A lot of interesting things to unpack in that video, and I want to ask you guys again to go watch the Q2 earnings wrap-up video. I think it's like 5, 10, 12-minute video that I put out yesterday. And if you watched that video, or if you go watch it, I talked about AMC's debt to EBITDA ratio, and that's kind of how they wrapped up this interview segment. The debt to EBITDA ratio right now is very close to 6. And really what we want to see is AMC pay down debt and or increase EBITDA to decrease this ratio. And you heard Adam talking about that they have been doing work. And if EBITDA goes up, that ratio improves. If debt goes down, that ratio improves. I talked about AMC's credit rating yesterday being CAA2. And that is junk status. Anything below BA1, you can see on the graphic here, is considered junk status. In fact, it is very close to being in default. And that is why they keep on getting these really high interest rates when they refinance the debt, which is good and necessary because they need to push that maturity out, or you risk bankruptcy, defaulting, not being able to pay the debt. Pushing the maturities out gives them room to grow and pay down the debt a little more. AMC wants, though, to get an improved credit rating over the next year or two, say a B3 or a B2. Still speculative, still junk, but not one step away from default. And what do you need to get an upgrade from CAA2 to B3? You probably need a debt to EBITDA ratio of between 4 and 5. And so there is work to be done, improving the balance sheet, paying down debt, and increasing earnings, increasing revenue, increasing EBITDA to attack this debt to EBITDA ratio. I know everybody is focused on many other ratios out there, price to sales, blah, blah, blah. Look, all of this is irrelevant if AMC can't service their debt or the box office isn't big enough for them to make a profit. We all believe, I think, that into the next 12 months that the box office will continue to grow. We saw that on $2.65 billion or so of box office in Q1 the company was very close to break even on a GAAP basis. And, if we take out the non-cash expenses, they were actually profitable for Q2. Yes, the EPS was -1 cent or whatever. We'd all like to see a positive number, but I told you guys back in the beginning of July that Q2 was going to be very close, very tough to call. They're on that precipice of loss or profitability, very hard to predict. Pretty good outcome overall, but we need the box office a little bit higher. I do not think Q3 box office is going to be anywhere near as good as Q2. I would prepare you now. I would prepare yourselves for a loss in Q3. And then Q4 should be gangbusters. I would expect a profitable quarter in Q4. And then we'll see, as we get a little more visibility into next year, then I'll start making some predictions about 2026. I haven't even done the work to try and quantify that yet, other than listening to all of these CEOs in the industry saying that they're expecting it to be one of the best years in recent memory. Like I said, I do have some other thoughts that I want to share with you guys. We touched on one of them at the very end of last night's live stream, listening to the earnings call, where we talked about the upcoming vote. We'll get a proxy statement, I expect, in October. There will be a vote, I expect, at the annual meeting in December. There are some things we need to talk about. There are some things you need to be aware of. There are some uncomfortable things that nobody else is going to talk with you about. Well, the bears will. The bears will talk about it because they're going to use it as a hammer to hit you over the head and demoralize you. I'm not here to pump you up or demoralize you. I just want to talk about the filings like I always do, so that you have a realistic expectation of what is coming down the way, and then you can make your own risk assessment about how you plan to handle the upcoming corporate actions or potential corporate actions. So this video is getting a little bit long. We'll talk about that maybe on a video later tonight or tomorrow. The October, December, what is coming. It's important for you guys to understand it because, look, we got to survive Q3, but October is just around the corner, and there's going to be a lot of important things coming across your plate if you're investing in AMC when we get that proxy in October. If you guys have any questions or comments, drop them for me down below. Thank you for watching. I am Tony Denaro, and I will see ya on the next video.